Okay. Yeah.
Thanks.
So good morning, good afternoon, good evening, everyone.
Доброе утро, добрый вечер. Я хотела бы сейчас начать эту сессию, которая является критической для развития достижения целей в области устойчивого развития. И мы все представляем, что необходимо.
Clearly have set ourselves goals within the stipulated time frame, a step to take us all towards a greener, more equitable and prosperous world. So where are we on these targets? If you look at the needs as have been established, a recent IMF estimate suggests that meeting the SDGs in 5 priority areas, education, health, roads, electricity, and water and sanitation by 2030 will require additional private and public annual spending of $528 billion for low and lower middle income countries and $2.1 trillion for emerging countries. So very ambitious in terms of the amounts of money that would be required. And then as we look at the financing of sustainable development activities, according to an UNCTAD estimation, the annual financing gap between current funding and what is required is about $2.5 trillion. So the numbers are huge in terms of the gap, and we have to look at how we can fill this as we go to achieve these goals. The COVID-19 pandemic has only impacted our economies even more severely on all fronts, with a sharper increase in the levels of inequality and poverty. And therefore, some amount of progress made by countries over the past few years in achieving the SDGs have also been wiped out, which isn't very helpful at all. So it is estimated that an additional 2.5 trillion annual SDG financing gap for developing countries as a whole is indeed what is going to be required. So in addition to what we had seen in those IMF targets set earlier. So as we look at mobilizing capital of this magnitude, there is clearly a great opportunity for the financial sector to drive investments in various areas of SDGs and to bridge this financing gap. And we are fortunate today to have with us experts from all the big countries who will share what each country is doing in this space and how we can work together as BRICS nations to achieve these collective goals and do this in a way that we can learn from each other's experiences. And you will see that there are interesting experiments, pilots going on in each of the countries. And in many cases, projects in one can easily translate to projects in another. Speaking from an India standpoint, and we do have a speaker for India in Amit Chandra, I would just say that India has indeed embraced these targets. We are one of the few countries that is on target as of now to achieving some of the climate change goals that we had set out, largely on the back of our renewables program. And as we in India go forward, ESG is beginning to become the language of at least our larger companies, both in the capital markets through the stock exchange regulator and through our Ministry of Corporate Affairs and, of course, the central bank, the Reserve Bank of India. So for all of you on the panel, we will, in fact, look at both the capital market side and the financial institutions lending policies to see how we can look at financing going forward. So on this note, and without much ado, I'd like to turn to our first panelist. The format we will follow is up to 5 minutes opening remarks from all of our panelists. And then I have a set of questions which I will direct to each of them. So our first speaker, and we will follow the BRICS alphabetic order. So Brazil gets to go first. We have Guilherme Teixeira, who is from CNF, which is the National Confederation of Financial Institutions, with a wealth of experience in this field. So over to you, Guilherme, for your opening remarks.
Thank you, Naina. First, I'd like to say how pleased I am to be here representing my institution, and also to congratulate my peers from India to this great event, and how happy I am to be here today with you all. To start, in the year of 2000, the first year of the new millennium, 189 UN member countries met to discuss the Millennium Development Goals, the MDG. The MDG intention was to create a common objective in the future so that the countries could converge their actions and maintain a certain level of utopia and hopeness in their perspectives. In 2012, at Rio +20, these goals were reworked in more concise collection of 17 big goals divided in 169 smaller and more precise goals for a sustainable future, intended to be completely implemented until 2030. These objectives were named as the Sustainable Development Goals, SDG, or 2030 Agenda, due to their goal of implementation. As the current Secretary General of the UN, Antonio Guterres, claimed, the 2030 Agenda is our new declaration of global interdependence. The goals go through 17 big areas that deal with issues such as drinkable water disponibility, gender equality, and quality education. The objectives are big and broad, searching for a better and more sustainable planet. Nevertheless, at a first glance, one could wonder if the financial system has anything to do with all of that. Indeed, there are no goals for green investments, sustainable financial institutions, or ecological lending. However, with a deeper vision, it's easy to find a wide space for all of that financial system has to offer. As an example, the first SDG, no poverty, is deeply related to the direct action of development banks and the fight against inequality. Also, some public policies of income transfer through the financial system, as have happened during the COVID-19 crisis in Brazil, have shown how banks and other financial institutions may have a crucial role in fighting poverty and social inequalities. The affordable and clean energy SDG is highly benefited from the financing of research and construction of alternative energies, both in academic studies, government research projects, and infrastructure investments. Another example of how the financial services may turn sustainable projects into reality. The SDG of decent work and economic growth is hard to disconnect from the financial system and its development and its developing infrastructures. Also putting a great attention to both public policies of income transfer and access to labor, and the crucial role of the private sector and its growth. All of that, it's also very clear when we closely analyze the actions of development banks and their projects at the implementation and promotion of the sustainable goals. Therefore, the privileged space that the private sector has in SDG development is pretty clear. And inside the private sector, the financial sector has an even more important role to play. That's why it's essential that financial actors have the consciousness of their role in the construction of the future. Some SDG incentive programs have already been implemented in Brazil, such as the Prêmio I will speak in Portuguese, Prêmio ODS Brasil, from the federal government, but the space for initiatives is always open and should be more encouraged. And the financial system as a whole has a lot to do and gain from them. Another crucial point, and one that really represents the situation of the SDG in Brazil, and we believe in the world as a whole, is the perception of the private sector that the business future is based on compliance and social responsibilities. A research from the Brazilian Federation of Banks indicates that 87% of the Brazilian consumers believe that the compromise with environmental and social matters is an attractive aspect in a company, and the idea of the responsible governance is growing more and more each day, both in academia and in business area. One does not think about the future of business without thinking about responsibilities. And the SDG were created exactly as to be the guide for public and private actors towards a more sustainability and equalitarian future. Finally, in the end, there are two big learnings for the financial system. In the first place, to realize the compliance with sustainability issues as an important mechanism, including for businesses, and the SDG might be the best map for the future. Understanding how the SDG and other global compliance mechanisms work is a crucial step to understand how the future will be. Secondly, the financial sector assumes the most important role in the private sector because of its ability to provide the chance and changes that SDG demands, be it by lendings, direct or indirect investments, technological development in the payment area, sectoral research, and with consumers. The financial sector has the ability and the space to be one, if not the biggest actor for sustainable development. By bringing to life the projects and ideals of the ones dreaming about a sustainable future, and by conducting the researches on digital currencies, climate-related risks, new methods of payment, and new criteria for lending, the financial sector can and should be the most involved and motivating private sector in the promotion of the SDG. So I'd like to say thank you all.
Thank you, Guillermo. And your stress on the private sector, its role and compliance are very welcome, and we'll come back to you with some of the questions.
Я считаю, что это очень важная тема, и сейчас я хотел бы предоставить слово нашему представителю из России, господину Кулешову. Он представляет Институт технологий в Москве.
Thank you very much, Madam Chair, and I really thank the organizers for taking this initiative with the Business Forum as it is, and in these difficult circumstances, we can still be together and discuss that. Common Fund for Commodities is an international financing institution, so we're no strangers to financing for SDGs, and Russia, as well as other BRICS countries, are major shareholders in this organization. I will stick to very specific points that I would like this discussion to reflect on. And firstly, it's already been at least 5 years that the ESG-aware investments are recognized as the new normal of finance. It has been recognized by professional business associations. 70% of investment managers look at ESG when managing assets. In Russia, the WebRF, that's a state development corporation of Russia, has developed a framework for national green finance system. It will create a level playing field for business, help Russia fulfill the obligations under Paris Agreement, and the framework also complies with the best practices in the international community. So we hope it will create sufficient incentives for Russian financial sector to invest in green technologies, in greening in the industry. Also, I was mentioning that Moscow Exchange has recently, just about a month ago, published a good ESG practice guide for companies listing on the exchange. And this, of course, promotes the financial flows to companies that claim ESG compliance in accordance with the best practice guides. Now, for those companies that adopt the SDG frameworks, the first priority is to manage the ESG risks. And that means that the main instruments for financiers in the ESG sector is exclusionary screening, that is, screening out the companies that do not comply with the ESGs. This will redirect the global financial flows. But at the same time, it needs to be harmonized. So my colleagues and I would like to suggest to look into establishing the BRICS-wide ESG association to develop a unified approach to BRICS ESG taxonomy, metrics, and methodology based on the assessment of the ESG issues that are most relevant to our countries. Also, has already been mentioned, the ESG is the lingua franca, the official language in business. But at the same time, the Sustainable Development Goals, the Agenda 2030, is the language of the international community. It is the language not only of business, but also of governments, of civil society. And this has wider international legitimacy and wider reach. It has more indicators. It goes a lot further into the territory of achieving positive gains in the direction of sustainable development, in the understanding of triple bottom line investments. That's investments that achieve not only financial returns, but also social and environmental positive gains for the countries involved. So BRICS methodology could also take into consideration the need to incorporate the SDG framework and the SDG metrics in harmonizing the reporting the compliance of private companies to the Sustainable Development Goals. Finally, just a couple of words that the financial sector in the SDG framework needs to expand its instruments. And I could mention two. That is strengthening the impact investing industry, the impact investing funds, where the Common Fund for Commodities is also active. And second, implementing the impact bond framework that I'm aware of is very active in South Africa, but for example, not in Russia, not in Brazil, and not in India. This can offer great options for directing financial flows towards the SDGs. Finally, the impact performance indicators are much more complex than simple financial indicators. A lot of work is ongoing on impact-adjusted financial reporting at the highest international level. But at the same time, to enable impact capital flows in the BRICS countries, certainly BRICS needs to look into this, needs to look into these methodologies, and needs to look into harmonizing the frameworks that will facilitate the investment in and across individual countries. I thank you very much, Madam Chair.
Thank you very much, Andrei, and we'll come back to you with questions, but the important issue of impact bonds and the sharing of some of these experiences across the BRICS countries is a very important space which you have touched on, and we will come back to some of this as we go forward. I'll now turn to my colleague from India, Amit Chandra, who is chair of Bain Capital India and has long been an advocate of things in the sustainability space. So Amit, over to you.
Thank you, Nena, and thank you, Andrei, for those very thoughtful comments. Much of what you said resonated deeply with me. I would like
Андрей, за ваше выступление хотел бы поблагодарить Организационный комитет за то, что они предоставили нам огромную такую платформу, очень хорошо организованную сессию. Я буквально займу у вас 5 минут.
Within the panel and for Q&A. I would like to begin by talking about what I call is a new reality that we face with SDGs. Unfortunately, that's not a good, but an extremely harsh reality. Over the last year, we've all been stressed on account of the pandemic and what that has resulted in for the bottom 50% of the human race across the world, but more so in developing countries. If that was not enough, we have been jolted by the mirror that the IPCC report has showed us on climate change, and that we will simply run out of time in pretty much all our lifetimes and see horrific economic and social destruction unfold, which will set the human race back to calamitous levels right before our eyes. Now, before all of this started and Nena set us up with some of the numbers, we believed that to achieve the 2030 SDG targets, just for India alone, we needed about $1 trillion annually. and we were already running about 50% short of that. Now, the reality of the fiscal situation caused by the pandemic and that tens of millions of people have been further pushed back only means that we have increased urgency to act faster, harder, and much more importantly, much more innovatively. So in this new reality, the question is, what can be done? And that's the question we need to answer. Now, first and foremost, I believe that everybody has a role to play in helping meet SDGs. And it is important for us to all agree that the government finances dwarf the philanthropic sector massively, and therefore the core responsibility will be, in example, in case of India, with central, increasingly with state governments and local governments. The role of foundations and NGOs will be non-trivial, but I believe it should largely be to focus on innovations, building templates, doing advocacy, and stepping in during emergencies like we saw in case of COVID, and filling gaps. I personally believe that the most important thing that both central and state governments can do is drastically improve the quality of social spending. This can be done by adopting a much more transparent outcome output monitoring framework, which is importantly aligned to SDGs. This needs to be done for all programs and schemes and linking public finances to it. I personally believe that this one single move will result in massively cutting wasteful expenses and importantly, improving delivering of SDGs. It will also free up capital allocations to much more effective social schemes. Second, within the private sector, the movement needs to be towards responsible, much more responsible ESG goals amongst corporates and investors. And I think that's a mega trend and it presents a mega opportunity that needs to be leveraged for meeting SDG goals. Third, we need to allocate far greater share of profits and importantly wealth to innovation so we can solve some of the biggest problems which are impacting the planet. Importantly, can we do that with greater urgency? Fourth, ESG assets under management are the fastest growing part of investing universe. They will touch over $50 trillion by 2025. Can we, within the BRICS universe, and for example, in case of India, get more than our fair share of this by embracing ESG as a mantra in each of our countries? And we have to ask ourselves, what will it do to take that? Fifth, and I think that's an important point that Andre raised, social impacting is going to be a large and growing universe. It has already become quite big, and I believe it's a mega trend. Can we ask ourselves, how can we be huge beneficiaries of this? Green companies, inclusive finance, financing waste management, it's a great opportunity. In fact, in case of India, we are very well placed to be at the forefront of this movement, given we have a unique confluence of developed markets, large number of intermediaries, entrepreneurs, and beneficiaries. What can we do to develop this as a major asset class is the question we need to ask ourselves. Sixth, creation of platforms. Now, the government of India made a very interesting move just a couple of years ago by signaling its desire to channelize private funds into financing SDGs by setting up an innovative platform called the Social Stock Exchange. I was a member of a committee which looked into this issue. It is important that we consider the report submitted by the committee and be imaginative to see how this platform can indeed become a reality and act as a greater bridge between private capital and the third sector. And finally, it is important, as Andre pointed out, to introduce new and innovative instruments for development finance. These could be blended finance, pay for performance as a concept, so that performance pressure can come in from the markets on specific schemes that can bring in greater public and institutional capital into these areas. Municipal bond markets need to be vitalized. And importantly, things like green finance, SDG bonds need to be introduced so that much greater share of finance needs to go into SDG-linked projects. Given what's at stake, I think the time has come for all stakeholders in India to act with urgency towards a common goal. It is time as Jamshedji Tata rightly put it over a century ago to put the community as a key stakeholder in free enterprise. Should be wanted not just to thrive, but simply to survive. Thank you for your comment.
Thank you, Amit, and thank you for setting out exactly what the roles might be for every player in the space, the importance of government and state in ensuring that the SDG goals are efficiently set and run, and then right through whether NGO, private sector, or the innovation that is required to ensure that we can indeed achieve the SDGs from a financing perspective. So thank you for that. I now want to turn to our colleague from China, Mr. Wang Kun. He's a senior, in fact, deputy general manager at the International Banking Department of ICBC, the Industrial and Commercial Bank of China. Over to you.
Thank you, Naina, and fellow speakers, ladies and gentlemen. SDG actually is a very broad topic. Today, I only want to focus on the green finance part of it in China. So I give you an overall introduction to what is going on in this very hot area. As you know, as a response to the UN SDGs, China has pledged to reach peak carbon dioxide emissions by 2030 and achieve carbon neutrality by 2060, for which tremendous financing is required to support the expected investment. So in this great transition, commercial banks like us can play an important role in ESG financing, especially for decarbonization projects. The Chinese banking sector has already taken multiple measures. In 2016, China's central bank, PBOC, took the lead in formulating the guidance on building a green financial system, along with a timetable and roadmap. By the end of 2020, China reached USD 1.8 trillion in a green loan balance and USD 125 billion yuan in green bond issuance balance. Ranking first and second, respectively, in the world. Recently, Chinese domestic issuers have issued more than 40 carbon neutrality bonds with a size exceeding $10 billion. Green loans of 21 major banks in China can save 300 million tons standard coal equivalents and reduce 700 million tons carbon dioxide equivalents every year. As the latest development, on July 16th, China's National Carbon Emission Trading Scheme, the National ETS, has entered into operation. The National ETS, though at its very initial phase, is the largest ETS in the world, covering more than 2,000 entities with aggregate annual emission exceeding 4 billion tons of carbon dioxide equivalent. So what we do in the banking area in China, firstly, align bank strategies with the national goal. Chinese banking industry has been aligning their own transformation targets and actions to realize China's goals of carbon peak and carbon neutrality. Secondly, establishing supporting mechanisms internally. For example, Chinese banking industry is taking customers' carbon performance as an important reference factor for overall credit assessment, based on which differentiated credit policies such as ratings and pricing are assigned to different performance. Thirdly, prioritize financial support for key sectors driving the transition, especially in renewable energy, green buildings, and clean transportation, etc. According to International Energy Agency, the three sectors, namely power generation and supply, building and construction, and transportation, account for 98% of China's total carbon emission. But looking to the future, more action points have been identified. Number one, enabling incentive policies will come up. PBOC is revising the green bond standards and is promoting international convergence of green taxonomies to attract more international investors. Fiscal and tax policies such as subsidies, interest discounts, and tax relief are considered. PBOC will also increase its support for green finance through commercial credit rating, deposit issuance, insurance rates, open market operation collaterals, etc. Number two, China's banking and insurance regulators will further improve the statistical monitoring and assessment system of green finance. PBOC is gradually incorporating climate change-related risks into the MPA assessment framework and conducting stress testing. It also plans to establish a mandatory ESG financing disclosure system step by step, unify the disclosure standards, and realize information sharing between financial institutions and enterprises. Number three, it is foreseen to give full play to the role of carbon market. With national ETS up and running, a national carbon capital market has taken shape. The emission allowance allocation and pricing will be further optimized, reflecting more financial attributes. It is also expected to introduce the trading mechanism of carbon financial derivatives, have a more risk-based carbon pricing, and maximize the incentive and balancing role of carbon pricing. PBC plans to launch carbon emission reduction supporting tools. Additionally, China's securities regulator plans to launch carbon emission allowance related futures. So I stop here for the moment. That's all my sharing, and maybe I can provide more information later during this. Thank you.
Thank you very much for some of the deliberations that you have added to our session, particularly areas to do with carbon pricing and derivatives and some very thorny areas which many of us have wrestled with, but clearly need attention. And who better than China to lead on some of these areas with all of us. So thank you for that. I'll now turn to the last of our speakers for her opening comments. Fatima Wauda, a Managing Director of 27 Investment Managers from South Africa. So Fatima, over to you.
Good afternoon, Chairperson, and good afternoon to all my colleagues from the BRICS chapters from a very nippy Johannesburg afternoon. So thank you for the opportunity and welcome to all our guests who are listening into the session. So COVID-19 has really exposed and exacerbated systemic social issues such as poverty and inequality, and has contributed to a growing interest in ESG and responsible investment, particularly in South Africa. It has also led to an increased focus on the opportunity for a green recovery alongside a just transition. Also, extreme weather events in 2021 have again highlighted the need for investors to address climate change. Africa is regarded as one of the most vulnerable continents on climate change, which is also expected to have implications for a range of other issues such as food security, inequality, urbanization, and health. Alongside the growth of responsible investment, there is also a growing list of shareholder initiatives supporting investor action on everything from climate change and biodiversity loss to modern slavery and animal welfare. Regulatory developments following the pandemic has also increased. The United Nations Principles for Responsible Investment identified 124 new or revised ESG-related policy instruments in 2020. International developments such as the European Union's regulation on sustainability-related disclosures in the financial services sector and moves in the United Kingdom to make the Task Force on Climate-related Financial Disclosures mandatory are likely to set the standard for other markets in terms of regulatory developments. It is also important to recognize that the urgency of the climate crisis requires a far swifter move from disclosure to real-world emission reduction plans. The financial sector might also consider more recent initiatives like the Net Zero Asset Managers Initiative, which sees signatories committing to support investing aligned with net zero emissions by 2050 or sooner. Also underline the need to move beyond disclosure to setting credible targets within investment portfolios. In South Africa, our National Treasury's May 2020 draft titled Financing a Sustainable Economy technical paper also paves the way forward. This initiative was aimed at encouraging available capital in South Africa to be focused on investment that not only boosts socioeconomic development, but also fostered climate resilient growth. In this document, there's a recommendation as follows: develop or adopt a taxonomy for green, social, and sustainable financial initiatives consistent with international developments to build credibility, foster investment, and enable effective monitoring and disclosure of performance. A green taxonomy was defined as an official classification or catalog that defines a minimum set of assets, projects, and sectors that are eligible to be defined as green in line with international best practices and national profiles, as well as national priorities. It can be used by investors, issuers, and other financial sector participants to track, monitor, and demonstrate the credentials of their green activities in a more confident and efficient way. The approach to this work, although founded on international best practice, was also to ground it in the reality of South Africa. The definition of climate finance thus included the cost of transitioning to a low carbon and climate resilient economy. This recognizes that although the ultimate aim is for finance to be directed at green initiatives, which cannot happen overnight without significant socio-economic impacts. Therefore, financing not only the end goal, but also a true transition that leaves no one behind, or a just transition which is essential in South Africa's case. This is aligned with South Africa's National Climate Change Response Policy. In addition to being the first stock exchange globally to introduce a sustainability index and to incorporate a move towards integrated reporting, the Johannesburg Stock Exchange once again paved the way towards a sustainable economy by introducing the Johannesburg Stock Exchange's sustainability segment in June 2020, which was a first for Africa. This segment enables companies to raise debt for green, social, and sustainable initiatives on a trusted global marketplace. Sustainability bonds are designed to finance socially responsible or environmentally friendly initiatives of projects such as employment creation, building low-cost housing, providing accessible education and training opportunities, supporting sustainable agriculture, reducing greenhouse emissions, combating climate change, rolling out green transportation systems, etc. We have seen a number of listings since the launch of the sustainability segment in 2020. Having a green finance taxonomy for South Africa is a big step in the right direction in attracting investment and ensuring that South Africa meets its international commitments. These commitments are outlined in our nationally determined contribution as submitted to the United Nations Framework Convention on Climate Change and currently under review. recognizing that there needs to be a transition that is just and is aligned with our national circumstances must be a priority. I thank you very much for the opportunity.
Thank you, Fatima. I think you have brought very much in front of all of us this issue of just transitions and the leadership that a stock exchange such as the South African exchange has provided becomes such an important player as we look at the capital markets to drive some of these changes in this areas to do with these just transitions. You also brought in this important issue of the green taxonomy, and that is something which I will come back to with the panel, where we should be looking at how we can share these green taxonomies across the BRICS nations and maybe even see some convergence in how we define this. And in this whole area of climate resilience that you alluded to, again, looking at financing as an important tool to make that change. So thank you for that. Indeed, all of the speakers for the issues you have touched on today. I'm now going to turn back to our speaker from Brazil, Guilherme, to ask you to just very quickly share the measures that financial institutions in Brazil have taken to align these operations around the SDGs. And specifically, you mentioned the Prêmio ODS Brazil for SDGs as an incentive program that you have in Brazil, to also share some of the details about this program. You're on mute, Guillermo.
Okay, thank you. Just to start, I have two examples to show you all. A great example of the role that financial institutions are taking in Brazil is the work of the National Bank of Development. In Portuguese, it's BNDES. They've separated in a website a space especially to show their work on the SDG promotion. And they have also developed projects in every single on one of the goals. Some of these projects actually incorporating 2 or 3 goals at the same time, showing how important it's for the bank and financial institutions participation. And the second one, we have also a resolution 4327. It's 4327 resolution from 2014. It was taken by the Brazilian Central Bank, and this resolution is defining the social environmental responsibility policy, the Brazilian one, for all the Brazilian financial institutions, and it's an important mark for all of entities. And to finish, the Prêmio ODS Brazil, it's a Brazilian Sdg Awards. It's a contest dedicated to increase the interest and participation of both federal governments and social society organizations in the SDG agenda. It happens every 2 years and helps the Brazilian government to create a record of good practices for the sustainability future. Some of its criteria are effectiveness, replicability, and the convergence to existing public policies. It helps to create a good environment for the SDG and set a solid basis for future projects.
Is the Prêmio ODS Brazil working well as this program works to impact the SDGs?
How? I didn't hear you.
The Prêmio ODS Brazil, the incentive program, is it working well?
Yes, it's working well. It's perfect.
So this is certainly something that we should all look to see how we might pick up on it. If I can now turn to panelists from Russia, and the question to you, Andrei, is, wearing your AI and technology hat, can you share with us how technology is helping towards meeting the SDGs and how we in the BRICS countries can cooperate in this space?
Thank you very much for this question. And within the time limit, I will simply mention a few examples. Truly, the AI technologies, they are reaching into just about every dimension of human life, and into every SDG you can find the ways that you can use AI. So I wanted to mention, for example, that AI is used to facilitate, to enable the central bank's instant payment system that can be used by individual citizens of Russia or residents of Russia to make instant payments from telephone number to telephone number with no commissions within limited. And that's a huge step forward in democratizing finance for Russia. Also, some regions in Russia, they are experimenting, trying to create sandboxes for regulatory sandboxes for delivery of goods by drones, especially the emergency medical supplies to be delivered by drones into remote areas. I might also mention that Moscow is quickly developing its capacity as a smart city with a smart transport infrastructure, public transport infrastructure that has a huge impact on the way people see themselves in the city and how you move around the city. And this is all enabled by technology, by the big data, and this seems to be moving at an amazing speed. Finally, wanted to mention the life on land, one of the SDGs, is standing to benefit greatly from the development of digital agriculture. And there's a number of companies producing solutions already in action for robotic agriculture, smart agriculture, sensors, big data collection, all of that combining to take agronomic decisions to increase the productivity, to use the land effectively, including robotic machine tools that more or less can attend to crops without human intervention. So this is just the beginning. There is a lot more coming. In remote areas, also Russia is experimenting with autonomous energy systems. So the system with smart load balancing between different producers and consumers of energy, not connecting to the central grid, that would also be valuable to BRICS countries, just like telemedicine that has been experimented for remote regions, also a great step forward. There's a lot more, but thank you for giving me a few minutes.
And clearly, all these become opportunities for finance and indeed, in many cases, for the social impact investing as well. So turning to Amit from India, the larger and international companies, Amit, are pretty much seen as being proactive in adopting ESG principles as compared to MSMEs, that's the smaller companies. And I suspect this is an issue across the BRICS countries. What do you think needs to happen to extend the awareness and adoption of ESG concepts amongst the MSME companies, particularly wearing a financing hat?
I think, Nena, there will be definitely a need to create role models, first of all, amongst the larger companies. And, for example, in India, as you're aware, but just to make the broader audience aware, we are moving towards a new reporting framework, which the securities regulator has just adopted. It is mandatory from next year. It is optional for this year for the top 1,000 companies. It's it's a new business reporting framework for ESG. I think the way typically things happen, it will basically set the standards for the large companies. I think once the large companies are able to, adopt it and work with it successfully, I think we will have a cascading effect and it will become easier for smaller and mid-sized companies to adopt it. So it is a journey. I personally feel that journey will take a few years because it also takes time for auditors, particularly the smaller auditors and consultants, to basically familiarize themselves with what it takes to really, go down a compliance framework. So I do think this is a journey which will begin with large companies and then go to mid-sized companies and eventually trickle down to smaller companies. Media will start talking about things a lot more. And I think that's the first part of it. In parallel, I think the second, part of the journey, which will begin relatively earlier and will be easier to adopt, is that many of the companies, and you talked about multinationals, I think they will lead the forefront of this, but certainly some of the largest companies will actually start working with their vendors, their suppliers, to ensure that they are compliant with ESG framework, because the thing that they will not want is that they themselves are compliant, but their suppliers are not compliant. And I think that will be a big opportunity, because it will bring a lot of mid-sized companies into the ESG fold. And if people realize that they can't basically be a part of supply chains without being essentially compliant, I think that may itself create a very good ripple effect. So I think that those are the two ways I see it basically playing out.
Thank you, Amit. You bring in the supply chain, and it is such an important area, particularly as financial investors force the larger companies to also look at their supply chains. And I think you're absolutely right. That is what will bring the MSMEs into that financing chain as well. If I might turn to a colleague from China, Mr. Wang, and to ask you to share some of ICBC's practices in international cooperation, and also how you believe that some of these areas might help in the BRICS cooperation.
Well, thank you, Naina. We have plenty to do in the international cooperation. At least there are three fields we can cooperate within the BRIC framework. Firstly, we can improve our ESG-related disclosure to raise more funding from international markets. Unlike credit ratings, ESG ratings are usually unsolicited, but based on public disclosure information. While more and more investors have become UNPRI signatories committing to greening their portfolio, various ESG rating agencies have also clarified their rating methodologies, so we can jointly work on improving the disclosure to truly reflect our ESG performance and ESG ratings in order to attract more international funding support. And secondly, I think we can harmonize the existing international standards with BRICS specificities. In green bond principles or green loan principles, sustainability-linked bonds, ESG rating methodologies, all of them have already been used internationally. So I think we shall identify what is specific with the BRICS countries and which has been neglected by these standards, and push for a better harmonized version. And thirdly, I think we can share our financing and investment solutions to enhance joint efforts. Each country have made their own useful attempts, and we shall pool the wisdom and resources together to populate the green financing support to a wider coverage by sharing practices and participating in syndicated loans and bond issuance. Yeah. For a bank, by participating in a broad range of international cooperation, we benefit in two aspects. One, we learn from the state-of-the-art concept adopted by developed countries, or developed the world. So we can converge the standards gradually. And secondly, we cooperate with specific institutions like other banks. A lot of them are from other 4 BRIC countries. So we work together to serve our common companies, and also through serving those big companies, we indirectly serve the SMEs on the supply chain, as just mentioned by the previous. So that is my comment. Thank you.
Yeah, thank you. And you've given us a number of platforms that we should be working on collectively in terms of taking the BRICS SDG financing agendas forward. If I might now turn to you, Fatima, and if we could hear from you on the whole area of green bonds and social bonds, and how the experiences in South Africa can help us in BRICS to emulate and succeed in some of those spaces.
Yeah, and Nona, I'd like to approach this from the perspective of as an asset manager. So I'm a practitioner, asset management firm. I've been active in the South African capital markets and global capital markets for many, many years. And from that perspective, South African financial institutions, including asset owners, have all been very active as part of being a signatory to the United Nations Principles for Responsible Investment, I would say at least for the past 10 to 15 years. So what happened in 2011 was that we established our own code, which we refer to as CRISA, which represents the Code for Responsible Investing in South Africa. So like the UNPRI, CRISA is a set of voluntary principles that supports the integration of sustainability issues in investment decision-making. What happened then in 2015 was the UNPRI called on the CRISA committee to strengthen the oversight of this code by conducting more detailed analysis of the current practices, analyzing the investment and other outcomes that result from the code. So anyway, this code for responsible investing in South Africa has now been updated, and a new code was issued in 2020 for public comment. That, together with what I spoke about earlier on, which our National Treasury issued this technical paper in 2020, referred to as Financing a Sustainable Economy, which is a technical paper which aims to define sustainable finance for all parts of the South African financial sector, including banking, retirement funds, insurance, asset management, and capital markets, to take stock of the global domestic financial sector policy, regulatory, industry actions, etc., and come up with this framework, which was then published. And then the Johannesburg Stock Exchange taking the initiative to introduce the sustainability initiative. So there's two components in South Africa currently at play. The one component is the listing of sustainability bonds and green bonds, and we've seen quite a bit of that happen. Several green bonds have now been issued on the Johannesburg Stock Exchange. Most recently, about 2 months ago, we had the Trust for Urban Housing Financing, in fact, launch our first JSE-listed social bond, which will see the proceeds being directed to affordable inner housing projects from March 2021, which was this year. So we've seen a number of these bond issuances also by development finance institutions as well as private sector institutions. And we're increasingly seeing institutional investment portfolios, asset owner portfolios that invest in the capital markets in equities and fixed income, allocating quite a good portion of their bond issuances towards green bonds and sustainable bonds, which goes in line with our efforts to reignite the South African economy following the shock of COVID-19, as well as the recent challenges which our global peers would have witnessed that took place in early July. So there's quite a bit of effort by both the public sector and private sector to work on initiatives and frameworks in revitalizing the economy and focusing on job creation, whilst not leaving everything else behind. So that's the one aspect of it. And then the second aspect is the increase in blended finance and public-private sector partnerships to, again, ensure that the private sector invests alongside government in achieving the SDG outcomes and targets that we have put for ourselves.
So thank you, Fatima. I think, you brought out the importance of BRICS forums such as ours to look at what Wangton also mentioned about financing solutions and ideas that we can share across the BRICS platform and look at replication in different countries as well. We are totally out of time. I would have loved to have dug deeper. I always knew that 1 hour was too little for a panel such as this. But let me just not even attempt a summarizing, but really just to share that every time we come together as a BRICS group, and I'm delighted that I can chair the Financial Services Working Group this year. I am so excited by the opportunities we have to share and learn from each other. And beyond opportunities, the advances that each country are making in your own spaces. But in making those advances, each of us can therefore also learn from what works and also what doesn't, because we have such a frank and free sharing in the platforms when we come together, so that we can have these course corrections as we go. So picking up on all the points made by many of you and all of you on the panel, I think what's coming out very clearly is that each of us countries is moving forward quite rapidly in the ESG space, where the taxonomy is being developed. But what we could well do is to have some commonality in that taxonomy, because it would help as a group if we go forward with a common taxonomy, which helps investors around the world to look at BRICS countries as being ahead of most emerging economies. The area of credit ratings and green portfolio disclosure that Wang Tung mentioned is again an important one, how the rating agencies develop the whole ESG space. Harmonizing with international standards, there was mention about the EU and others. Yes, we have to live with the rest of the world. There's financing that comes from the rest of the world, and we in turn will finance the rest of the world. But for all of that, harmonizing with international standards becomes important. And then the whole area of financing solutions, so well brought out by Fatima, by Ahmed, by Guilherme, that no matter what we look at, there are experiments in some cases and otherwise hugely successful funding innovations that have happened, each of which can take us forward. And as we look at this, it's not just the financing tool, but also the technology, as Andre mentioned, the fact that there are opportunities that come through technology, which make it possible for us to look at financing some of those impact spaces. So through all of this, the common thread for all of us is A, the need of finance, B, that we want a just transition, that no one gets left behind, and the whole space of inclusion that many of you mentioned, and C, that we love working together and that we will be back together across some of the discussions we are already having as part of the Financial Services Working Group. So thank you, each one of you, for what you bring to the table, and may we continue to work as productively as we have thus far in bringing a lot of this learning to the world. Thank you. Thank you, everyone. Bye.
Thank you, Anna. Bye-bye.
Thank you very much.
Thank you.
Bye-bye.
Bye-bye.
Thank you. Thank you. Bye.
Thank
Bye-bye.
you. Thanks for great moderation.